Ask, O Lord, that you give us the grace to understand, give us the grace to understand, give us the grace to be alert, give us the grace to move forward with the new tax laws and to implement it both in the organizations as accountants or as consultants. Give us the grace, Lord, to do the right thing so that the tax reforms will actually bring out what it's supposed to do in Nigeria. Father, Lord, make this webinar a success. For this we pray, O Lord, in Jesus' name. Amen.
Okay, thank you, Ma. I think we need to move on to the anthems now. First with the national anthem, which will be followed closely by the icon anthem.
Okay, I'm sharing it from my end.
Okay.
Here we are, we hail thee, our own dear native land. Though tribe and tongue may differ, in brotherhood we stand. Nigerians all and proud to serve our sovereign fatherland. Our flag shall be a symbol that truth and justice reign. In peace or battle honored, and this we count as gain. To hang on to our
Hello. Yeah, thanks, Dr. Vaughn, for the opening remark. Please, can you all hear me? Please confirm you can hear me. Hello. Okay. I lost connection a bit, so you can stop sharing, Dr. Vaughn. Let me share from my hand now. Okay. You are all welcome once again to the October technical session for Micro and District Society in collaboration with One Team Social Club of Nigeria, where we have curated, programs to help upskill either relating to technical areas that relates to, the professional services that we offer, or current affairs, issues relating to current affairs that is happening, impacting our profession. And I think that's one of the things, we have brought on, bringing to you today. We have two powerful presenters, the person of Dr. Kennedy Iwunbu, who will be giving us lecture on preparing companies, regulators, business individuals on changes from the new tax reforms that is that is going to be effective from 1st of January next year. And we have Mr. Muhyiddin Agbola, who will be taking us on emotional intelligence and empathy, which is one of the attributes that is required of accountants, in delivering services to our clients. Dr. Inwundu will be presenting a paper for about 1.5 hours. I'm sure we all know we have lots and lots of things relating to the new tax bills. And it's not something that, we can unravel within a particular period. So we are going to take his own perspective. He's a notable speaker when it comes to tax issues relating to Nigeria, and I'm sure we are going to really enjoy the session with him. He's going to, engage us about 1.5 hours. Please note we are not going to take any question immediately after his session. We are taking the two papers, for this webinar back to back. And it is after the end of the second paper that we will take questions. We'll allow questions for about 15 minutes. So if you have questions in the course of any of the paper presentation, note them either on your paper. During the question and answer session, we'll give you the opportunity to ask questions. Or you can note them in the chat room. And at the end of the presenter's presentation, we will make that available for you. Please note that this webinar, a paid webinar, to speed the credit hours with the Institute. And once this is concluded, all registered participants will be, credited with the MCP credit hours. We equally make the slides available to you as well as the recording through the same email you registered for the session. Proud to presenting the paper presenters. I think I will call on the chairman of the district society in the person of Saditayo Hassan, who is to provide us with his welcome address. Over to you, chairman, for your welcome address, sir. Oh, wow. Sorry. Okay. You can unmute now, sir, chairman.
Okay. Thank you very much, the anchor man, Mr. Alatise. I want to welcome our professional colleagues and friends to the concluding part of the webinar on taxation. as you all are aware, taxation is in thing now, because come January 1st, 2026, there will be a new tax law which will be applicable generally. The law was passed by the national legislation in May and assented to by the president in June, with effective date being 1st of January 2026. The essence of the new tax law is to ensure that many taxpayers are now brought into the tax dragnet, and a lot of work has been done by the Taiwo led committee. And for tax practitioners, taxpayers, tax consultants, we need to keep abreast of the new tax laws so that it can help us to guide our own tax planning, those of our clients, and people we deal with generally. The first session has given us an insight into preambles we should expect. This is the concluding part. I want us to listen attentively and benefit from the our seasoned lecturer, Dr. Yvonne. So let's stay attentive and listen to the discussion. Thank you very much, Anchorman.
Thank you, District Chairman, for that welcome address, and we appreciate you for your word of commendation. So it's now time to present our fourth presenter in the person of Dr. Iwundu. I will appreciate if a co-host right can be given to Dr. Iwundu. He has two devices so that he'll be able to present and equally unmute himself. Dr. Iwundu, I've tried to unmute you on any of the two devices you have, pending when. Please confirm if you are able to share your screen. Dr. Iwundu. Please unmute yourself. This class training, please, can you give Dr. Iwundu a co-host rights?
Yeah, I'm the co-host. Go ahead. Thank you.
Okay. So prior to you, while you prepare for your presentation, I would like to, read out your profile. So, ladies and gentlemen, I present to you Dr. Kennedy Iwundu. He's an associate professor of forensic accounting of ICT University in Cameroon. He is the immediate past chairman of CITN Abuja and District, and the past chairman and founding member of FPT Tax Practitioners Association. He served as he's currently a tax advisory partner at Accounting Tools Consulting Services and holds a director position on the board of the Association of Chartered System Tax Professionals. I can bet you he's a great presenter, as in he's somebody that even when I see any of his flyer, I don't as in I'm not looking forward to missing any of his own presentation. So I'm sure we are going to enjoy his presentation and his own perspective as it relates to the tax bill. Dr. Iwundu, over to you, sir. You have 1.5 hours for your presentation. So I'll be stopping you at 1 o'clock. Can you unmute yourself, Dr. Nwundu?
Okay, I've done that. Thank you, professional colleagues. Let me share the paper now, and I hope you can see the paper. Can you see the paper?
It's still coming up. Okay, I think we can see it now.
Can we see the paper?
Yeah, but not yet in presentation mode. We can see your...
Okay, not yet in presentation mode.
Yeah.
Emeka? Okay, let me put it in presentation mode.
Okay, sir. Good. Yeah, so you are ready to go now, sir. Please unmute
Okay, I
yourself.
think you can see me now.
Um,
Can you see the presentation?
Yeah, it's in presentation mode now, sir.
Okay, thank you. Yeah, thank you so much. Once again, good morning, professional colleagues. We are here again to look at the new tax law, that is Nigerian tax laws, that according to the chairman has always said that the implementation will start by January. Of course, that is what it is. Not that the chairman said, that is what it is. So we are looking at from compliance to confidence, preparing companies, regulators, business and individuals on changes for the new tax laws. Now, I started by saying that the president on 20th June 2025 signed the 4 tax reform bills and made them to be laws. They are Nigerian Tax Act, Nigerian Tax Administration Act, Nigerian Revenue Service Establishment Act, the Nigerian Joint Revenue Board Act, therefore referred as the Act. The Act comprehensively overhauled the Nigerian tax landscape to drive economic growth, increase revenue generation, improve the business environment, and enhance effective tax administration across different levels of government. The tax reform was also aimed to remove the low-income earners from tax net, collect more taxes from high net worth individuals, remove small companies from paying taxes, and promote foreign and local investments. The Nigerian Tax Act 2025 was a unification of all taxes into a single fiscal legislation, while the Nigerian Tax Administration Act is a unification of administrative framework aimed to ensure compliance, enforcement, and collection of taxes. So this paper is looking at tax assessments, filing of returns, tax rates, tax liabilities, tax dispute resolution, among other issues. Now, when we talk about tax assessment, I've been able to break down this tax assessment into various categories. We have self-assessment supported in Section 11, Section 13, and Section 34 of Nigerian Tax Administration Act. We have administrative assessment supported in Section 35 of Nigerian Tax Administration Act. We have the profit assessment supported by Section 38 of Nigerian Tax Administration Act. Then have additional assessment, Section 36. Section 57 is talking about tax audit assessment, while Section 64 is talking about tax investigation assessment. Let me give a little brief on this. Self-assessment is when taxpayers on their own file returns and pay taxes as at when due. So as a taxpayer, when you pay your taxes and file returns, fill the forms and provide all the information and file returns as at when due, call it self-assessment. Then administrative assessment is when you have failed to file returns. So the Revenue Authority will now come up with their own assessment for you now to pay tax when they have access to information, your financial information. So they have the right that if you fail to do self-assessment, they can come up with administrative assessment. Then deemed profit assessment is when your assessable profit cannot be ascertained, or when your assessable profit seems to be very low compared to the industry average, or seems to be very low and not trustworthy. Then the Revenue Authority will apply deemed profit assessment. And in that deemed profit assessment, what they will do is they will give you 80% as your total cost and tax you on 20%. For example, if you fail to file your returns and they get, or you file your returns and they're not too sure of what you have done in terms of ascertaining your assessable profit, assuming your turnover is 100 million, they will grant you 80 million, being the 80% cost, and subject you to tax of 20 million. So they will apply 30% of 20 million, which is 6 million. So that's deemed profit assessment. Then additional assessment is when you file your returns and the Revenue Authority discover that there's issues in your returns, they can also raise additional assessment. Then tax audit assessment, of course, you know, tax audit is a routine just to cross-check what the taxpayer is doing. So when they review what the taxpayer is doing during audit routine, they can now raise additional assessment, and that becomes a tax audit. Then investigation, we are going to look at it when we go into investigation and what happens. Investigation is not just routine, it's always being triggered. Now, let us look at the due date for returns. Due date for returns. Personal income tax from next year will be on each year of assessment. Currently, personal income tax is 31st March. The due date for personal income is 31st March currently. But from next year, the new law says each year of assessment, means that the taxpayer has right now to choose the period he wants to file the assessment. Just like a company normally choose accounting date. Many companies in Nigeria choose 31st December as accounting date. So the new law starting from next year says no more 31st March for personal income tax returns. Any person, any individual is obligated to choose any time of the year and file. But if you choose any time of the year and file, that period must be consistent. Assume that you choose that you'll be filing every June. That means every June you're expected to file that return. So if you fail to file on June, if you file after June, there will be penalty. If you choose to file every November, that's it. If you choose to file every January, so once you choose to file, you have to be consistent in filing that return. Then payee return is at 1st January of every year. So all employers of labor are expected to file payee returns on or before 31st January in the year. Then company income tax and development levy. You know, currently what we are doing is company income tax and education tax, among other levies, NASENI, NIDA, and all that. But from next year, we'll be assessing company income tax and development levy. So company income tax, company should file return within 6 months after the accounting date end. So that is expected. Then VAT and withholding tax return, you're expected to file not later than 21st of the following month of transaction. So for VAT and withholding tax, not later than the 21st day of the following month of transaction. Now, let's look at filing of returns proper. From the Nigerian Tax Administration Act, all individuals must file returns, including those exempted from paying tax. You can see that in Section 13, Subsection 1 of Nigerian Tax Administration Act. Taxation is a product of law. So anything you have to do must be in line with the provisions of the law. So that is it. So in filing of returns, we look at the individuals. Say all individuals, all, the word is all, must file returns, including those exempted. So that means even if your staff are any minimum wage and below, they are exempted from paying tax. As a corporation, as an employer, you still have to file their returns and indicate that they have no tax to pay, but you have to provide information that this is what they are earning. They are earning 50,000, they are earning 60,000, they are earning 70,000. They have no tax to pay, but you have to fill information, put their names, put the amount they are earning, put nil tax payment, and you file. So don't say, because our staff are earning below, any minimum wage below, therefore we won't file their returns. That's not what the law says. If you don't file their returns, there'll be penalty for not filing their returns. The law has exempted those individuals from paying tax, but the law says they should stay file returns. So you can see that I made it very, very clear here that all individuals must file returns, including those exempted from paying tax. That is section 13, subsection 1 of the Nigerian Tax Administration Act. The companies, if you go to the companies, all companies must file returns, including those exempted from paying tax. So all companies must file returns. You can see that on section in sections 11 of Nigerian Tax Administration. Owners of company will not say, the law has exempted us from paying tax, therefore we shouldn't file returns. If you don't file returns, there'll be heavy penalties waiting for you to pay. Even though companies have been exempted from filing returns, the law says companies have been exempted from paying tax, but the law says they must file returns. The idea of filing returns is for everybody, for every company, for every organization, for every entity, even including those the law has exempted from paying tax. So you can see that in section 11 of the Nigerian Tax Administration Act. Then VAT returns, businesses with turnover of 100 million and below are exempted from filing VAT returns. You can see that on section 22, subsection 4 of Nigerian Tax Administration Act. Businesses with turnover of 100 million and below are exempted from VAT returns. So please let us note there. And I made a note on the bill. I said this means business that have turnover above 100 million are mandated to file return, even when the business is trading on non-vatable items or goods. So if you have a turnover more than 100 million, but even if you are trading on transactions that are not vatable, you're also required to file returns. Now, when returns are filed, section 34, subsection 4 of Nigerian Tax Administration Act made it clear. When returns are filed, the tax officers can accept the returns without making additional assessment. Tax officers can accept returns without making additional assessment. Another one is that tax officers can accept returns and make additional assessment. And the last one is that tax officers can reject returns and issue administrative assessment. So please, let's note that. Don't say I have filed returns under self-assessment. Why are they rejecting my returns? Why are they giving me additional assessment? The law has empowered them. In fact, when I read through the new tax laws, the new tax laws gave the revenue authorities more powers and more privileges. Yes, I've gone through it. They even have more powers now, more than what we are seeing currently. So we should be very careful how we're going to go with them next year. So you say when you file the returns, tax officer can accept the return without making additional assessment. They can also accept the returns and make additional assessment. They can also reject the returns. I know before any returns can be rejected, possibly something must have gone wrong. One of my presidents said that somebody did a return to the FIRS in Chinese language, filed the returns in Chinese language. People can file returns in Hausa language. And of course, when FIRS receive their returns, and they will reject it because they won't understand what the returns is talking about. So they have right to reject the returns if the returns is not up to the standard it's supposed to be. So you have to look at the standard. There should be You have to, your returns should comply with IFRS, statement of comprehensive income, statement of financial position, statement of changes in equity, statement of cash flow, and notes to the account. Then you attach your capital allowance computation, attach your tax computation, attach evidence of taxes paid. So you have requirement for filing returns. You must look at those requirements and make sure that you are filing based on the components of those requirements. But if it doesn't meet up, I'm sure the revenue authorities can reject the return and issue administrative assessments. Now, we're looking at the procedures for additional assessment by tax officers. Let's look at the procedures. There are three major procedures tax officers do take when they are issuing additional assessment. One is DEX examination, then the other one is tax audit, and the other one is tax investigation. Now, let's look at DEX examination. DEX examination is a compliance check of taxpayers' returns, confirming arithmetic accuracy, that expenses claimed are allowable, tax rates and capital allowance rate applied were appropriate, transaction taxes and annual taxes have been paid, and that accounts and tax computations were prepared in line with the accounting standards and tax laws. So that is what DEX examination do. DEX examination is a superficial review of the returns. You know, that's why I disagree with tax officers who demand for bank statement, demand for source document during DEX examination. I normally tell them, go and look at the criteria, the procedure, the requirements for filing tax return. In the documents required for filing tax returns, there's no bank statement there. Yes, if you go and look at the requirements for filing tax returns, both at FIRS and the State Internal Revenue Service, they will state all the list of things you are going to do. They didn't include bank statement, and they know the reason why bank statement was not included. So when DEX officers demand for bank statement, demand for receipt, demand for primary documents, I get very angry, and I write to them, you have no right to demand for primary documents at this stage. So if you are carrying out tax audit and investigation, of course, the taxpayer has to make sure he's subjected to provide his primary documents, his contracts agreement, his bank statements, his receipts, his invoices, agreements, and all that. So I want to reaffirm here, and the FIRS issued a circular to this effect. I'm not just talking it, I'm just also saying it because when they started doing this, I met the FIRS management and had a discussion with them. And FIRS management came up with a circular to guide their field officers on how to conduct themselves during DEX examination, tax audit, and tax investigation. So we expect that DEX examination should be carried out without subjecting the taxpayer to tax audit or investigation, because some people during DEX examination end up carrying out audit. It's not supposed to audit a company during DEX examination. DEX examination is a superficial review. It is not profound. It's superficial. So now when we talk about audit, tax audit is a routine verification of taxpayers' financial records to confirm accuracy and compliance. You know, tax audit has CCA status of limitation. Currently in our Company Income Tax Act, 6 years status of limitation is enshrined in Section 66 of CITA and also in Section 33 of PITA. CITA is Company Income Tax Act, while PITA is Personal Income Tax Act. So let me repeat again. 6 years status of limitation when it comes to tax audit is currently enshrined in Section 66 of Company Income Tax Act, CITA, and also Section 33 of Personal Income Tax Act, PITA. So mean that if a company is to be subjected for tax audit, the tax officers are not supposed to go beyond 6 years. I had a case where my client was written a letter for audit and they were saying they are auditing for 8 years. And I replied them that is not what the status of limitation is saying. The status of limitation says 6 years. So you cannot do more than 6 years. And if you want to continue, I'll tell you will not continue. So please withdraw your letter and make sure that your audit period covers 6 years. And the tax officers withdrew the letter and brought another letter that showed that it covers for 6 years. So we need to understand the laws. The tax laws should be part of our Bible for those of us that are practicing. If you say you're a tax practitioner, a tax consultant, now you don't know the provisions of the laws, that means you won't do well in it. So we need to understand the provisions of the law and abide with it and make argument with it. Any argument I'm making with anybody in tax today, I'll quote wherever I'm making the argument from. And I'll also ask you to quote where you are making your argument from. And that is how it's supposed to be. Taxation is a product of law. So if you are applying taxation without looking at the law, it amounts to lawlessness. Then the next one we're talking about is tax investigation. A tax investigation is more detailed examination or verification of taxpayer financial records triggered by suspicion of fraud involving deeper scrutiny and legal implications. Tax investigation has no status of limitation. Now, if the Revenue Authority writes to you that they are investigating you, there is no status of limitation. They can investigate you till infinitum. They can investigate you till even the time you started existing. They can investigate a company from now to the time the company was incorporated because it involves fraud. Fraud is a crime. Crime has no status of limitation. Whenever somebody commits a crime, there is no status of limitation. Even if the person ran away, I could remember one man killed somebody in the United States and ran to Mexico. After spending 20 years in Mexico, he came back to America, they arrested him and jailed him. And he was saying that he thought the crime he committed has status of limitation. They said, no, committed a crime, there is no status of limitation. It's forever and ever. Okay, let's look at the company tax rate. The company tax rate as enshrined in Section 56 of the Nigerian Tax Act. Section 56 made it explicit that companies with 0 to 50 million turnover from next year activities will have 0% CIT rate. Companies with 0 to 50 million turnover from next year will have 0% CIT rate. Remember that the word is 0%. They didn't say the company is exempted from tax. Rather, the company will pay tax, but the tax rate is 0%. So they know the reason why it's 0%. Maybe when we go into technical analysis, we can do that. Then, and the second one is companies that have above 50 million turnover will pay CIT of 30%. The CIT rate for companies that have above 50 million turnover is 30%. The minimum tax is eliminated. Currently, we have a minimum tax as stipulated by Section 33 of CETA. But the Nigerian Tax Act says moving forward by next year, there will be no minimum tax, especially for companies that have genuinely declared loss. So if a company has genuinely declared loss, no more minimum tax for them, unlike what we are currently doing now. Even when a company has declared loss and has operated for more than 4 years, the law still asks the company to pay minimum tax. That's what we are currently doing now. But by next year, that one have been abrogated. So no more minimum tax from next year. So we also have another set of companies called the multinational enterprises and companies with a turnover of 20 billion and above. The law says they will still pay 30% CIT rate, but with 15% minimum effective tax. So there's a minimum tax of 15% for multinational companies and companies that have turnover of 20 billion and above. You can see those in these issues in Section 56 of the Nigerian Tax Act. I know that most of you have a lot of questions to ask, but when the time comes, we are going to clarify some of these things. Now, I want to delve into tax dispute resolution. Tax dispute resolution. I hope people are hearing me. Are you hearing me?
Yes, we can hear you. Go ahead, sir.
Thank you very much. So we'll look at tax dispute resolution as stipulated in the Nigerian Tax Reform Act. Now, when a tax dispute is inevitable, tax dispute is absolutely inevitable. When Nigerians don't want to pay tax, not only Nigerians, all over the world, people don't like paying taxes. So when they now see that an assessment has been raised and they feel the assessment is so much, without caring however the assessment comes, they will dispute it. They will say, no, I'm not going to pay this. So, of course, there will be tax disputes. It is absolutely, absolutely inevitable. So the law has provided how disputes can be resolved. And that is what I want to say right now, so that we'll be mindful of dispute resolution. Because when we enter next year, there will be a lot of disputes. When we enter next year, there will be a lot of tax disputes. And professionals should look at the provisions of the law for easy resolution. So let's go. Now, when the tax authority issues an assessment, when the tax authority issues an assessment to a taxpayer, be it an individual or a company, the taxpayer is expected to object to that assessment. If you feel the assessment they gave you is not fair, you have administrative objection, and that should be done within 30 days. That should be done within 30 days. You can see that in Section 41 of the Nigerian Tax Administration Act. So that's why if I have some of my claims the Revenue Authority have written, I quickly reply their letter, especially if it's assessment. Because if you don't reply to object to those assessments with genuine reasons, after 30 days, that assessment is final. If you go to court, I bet you are going to lose. If you go to court, I bet you are going to lose. So we should be very mindful when an assessment is given to us, and we kept quiet. When an assessment is given to us and we kept quiet for more than 30 days, the Revenue Authority can enforce that assessment on us. In our local parlance, they say silent means consent. You were written an assessment that this is what you are owing, and you kept quiet. It means that you have consented. You've consented, and you have no reason to argue after 30 days. So please let us be mindful of that. Our administrative objection by taxpayer should be within 30 days, and it is clearly stipulated as Section 41 of the Nigerian Tax Administration Act. Now, what happens if you reject the assessment and the Revenue Authority say, no, it's still your assessment? What will happen? So let's look at it. Refusal of objection by the tax authority should be within 90 days. That means when you object to the assessment, the tax authority has 90 days to respond. They have 90 days. So if after 90 days the tax authority did not respond, your objection stands. Listen, know, when they give you an assessment, they have 30 days to respond to say, I don't agree with reason. And when you write to them, say you don't agree, they have 90 days to respond. After 90 days, they did not respond, your objection stands. But where they responded within 90 days, based on Section 41, subsection 6 of Nigerian Tax Administration Act, what do you do when they refuse your objection? When they refuse your objection, where the tax authority issue refusal to objection, the taxpayers has 3 options left. The taxpayers have 3 options left. Option 1, amicable settlement. Amicable settlement is seen in Section 141 of Nigerian Tax Administration Act. So if they refuse your objection, you go and sit down with them and amicably see a way to resolve that issue. Where you don't want amicable resolution, you can now use tax ombud. Tax ombud is the new one in our tax law, known as Tax Complaint Commission. You can petition to tax ombud. You can see that in Section 36 to 49 of Joint Revenue Board Establishment Act. So you can petition to tax ombud. And if you don't want to petition to tax ombud, you can also appeal at the Tax Appeal Tribunal. And from tax appeal tribunal, if you are not satisfied, you can go to Federal High Court. If you are not satisfied, you can move from Federal High Court to Court of Appeal. And from Court of Appeal, you can move to Supreme Court. So decision of the Supreme Court becomes final. And whenever the Supreme Court decides, that is all. You can only appeal to God after Supreme Court decision. So you can see that in section 41, subsection 8 and 9 of the Nigerian Tax Administration Act. So this is tax dispute resolution. So please, when you get this paper, go through it so that you can see various ways to resolve disputes when taxes arises. Now, when do we say tax liability is final and conclusive? When do we say tax liability is final and conclusive? A tax liability is final and conclusive when one, no valid objection within 30 days. Assessment was given to you and there was no valid objection from you. After 30 days, that tax liability is final and conclusive. Number two, amount of such income, profit, and tax has been agreed between the taxpayer and authority. So if finally you and the tax authority, the taxpayer and the tax authority agrees that this is the final tax I will pay, and two of you are okay and signed up for your papers, that tax liability has become final and conclusive. If you agree with them, it becomes final and conclusive. Assuming that they say you are going to pay 100 million, you say, no, I'm going to pay 10 million. And from there, he ended up agreeing that it's 50 million. That 50 million become final and conclusive. They may say you are owing 100 million. You say, no, I'm owing 10 million. And they are coming down from 100 million to 90 million to 80 million to, 70 to, and you are moving from 10 to 20, and finally you ended up at 50 million. Once you agree at that 50 million, that tax liability is final and conclusive. Then number three is amount of such liability has been determined by objection or reversed. You objected and they did not respond, is final and conclusive. Or they responded and said, no, we refuse your objection. And you did not appeal. You did not settle it amicably. You did not go to the tax appeal tribunal. You did not go to ombudsman. Whatever liability they said no becomes final and conclusive. Another one is assessment has been agreed to, reverse, or determine on appeal. In this case, the court will rule. Once the court rules that this is the liability, that liability becomes final and conclusive. Now, here is the table I prepared for tax returns, and I extracted this table from the new Tax Act. You can see various income tax, various returns, time of filing, and persons available to file the returns. You have income tax return for corporate. It's supposed to be filed annually for 6 months after accounting year, every company, resident or non-resident. You have income tax return for individual, each year of assessment, individuals, resident and non-resident. Payee is 31st January, is the employer that is responsible to file. Actual returns for upstream petroleum operations, 5 months after the period ending on 31st December. Companies in upstream petroleum operation will file the return. Annual returns for petroleum royalty, 5 months from the end of the accounting period. Companies in upstream petroleum operation will file their returns. Returns for virtual assets providers is same as income tax return. Virtual asset service providers will file the returns. Returns by priority companies that has pioneer status, same as income tax return. Priority sector entities will file the return. Tax incentive return, same as income tax return. Entities enjoying incentive file the returns. Estimated return for liquefied natural gas, not less than 2 months after the commencement of each accounting period. Companies in liquefied natural gas operation will file the returns. Estimated returns for upstream petroleum operation, not later than 2 months after the commencement of each accounting period. Companies in upstream petroleum operations will file their returns. Monthly returns on petroleum royalty on or before 14 days of the following month. Every licensee engaged in petroleum operations will file their returns. Monthly returns for mineral royalty, 21st day of the following month. Companies in mining business will file their returns. Monthly returns for non-resident shipping and airline companies should be filed on 21st day on or before 21st day of the following month. Non-resident shipping and airline companies are expected to file their returns. Value-added tax returns, VAT returns, should be 21st day of the following month. A taxable person in respect to value-added tax should file their return. Returns for surcharge. Surcharge has been suspended. They were supposed to start implementation of surcharge by next year, but the government said they have suspended surcharge because of opposition coming from the public. So surcharge returns should be 21st day of the following month, and taxable persons engaged in the provision of fossil fuel is expected to file their return. So please, when you get this paper, try as much as possible to study these returns when they are supposed to be filed. If you're a tax consultant, advise your client. Sometimes when you are putting your advice, you can put it in writing, because sometimes I advise my clients orally, and tomorrow they will not do the needful and they will blame that I didn't advise them. So the one thing I've learned now is that when I'm advising them, I put it in writing. You put your advice in writing so that when the taxpayer falls into heavy penalties, if he's trying to accuse you, you show him that I wrote you a letter advising your organization when these returns are supposed to be filed. And I've done the needful, so it's left for you to file your returns. Now, we also have penalties for penalties stipulated in the Nigerian Tax Administration Act from Section 100 to Section 127. These are list of penalties. Failure to register. First month is 50,000, 25,000 every subsequent month. Failure to keep books. Failure to keep books. Failure to keep books is 10,000 for individuals who fail to keep books, and 50,000 for companies who fail to keep books. It means that if the revenue authority comes to you and discover that you're not keeping books, definitely they will penalize you for not keeping. Failure to use physicalization, 200,000 plus 100% of tax due and interest at CBN. Failure to make attribution, 1 million naira. Failure to attend to demands and request notices by the revenue authority, 100,000 for the first day and 10,000 for every subsequent day you refuse to attend to their request. Then you have failure to stamp. Maybe you have a transaction, you are supposed to put stamp duty. Failure to stamp is 10% of the unpaid duty and interest. Failure to notify change of address. Some companies will leave one location and move to another location. They will not notify the revenue authority. Now it is an offense. If you move your address and relocate from one place to another without notifying the revenue authority, you are going to pay 100,000 for the first month and subsequent 5,000 every month you have not notified them until you notify them. So it is now an offense for you to relocate and move your company, or an individual, you relocate and leave your residence and say, I'm no longer living in Lagos, I'm now living in Abuja. If you relocate from Lagos and you decide to live in Abuja, it's your duty to write to Lagos State Internal Revenue Service, I have relocated to Abuja. So please, I'm no longer your taxpayer. So the law says you should do that. And if you fail to do that, you have penalties to pay. Offenses by authorized and unauthorized persons, 200,000 of the sum in question, or imprisonment no later than 3 years or both. Failure to file returns is 100,000 for the first month and 50,000 for the subsequent month. What is the current? I want to ask this question. Sorry, what's the current penalty for not filing returns? Who can tell us the current penalty for not filing returns? Failure to file returns. What's the current? Who can tell us smartly? The first month is how much? Sorry, I'm a lecturer, so a lecturer asks question while teaching. When you fail to file returns right now, as we speak currently, what is the penalty? Who can tell us smartly? Can somebody talk? Can somebody unmute himself or herself and talk and move?
Doctor, so that we can coordinate activities. We mentioned everybody, but there are responses in the chat room.
Okay.
That you can, if we are able to see, you will see the responses being offered.
Okay, thank you very much. I'll see the response. So currently, the penalty for not filing returns is 25,000 for the first month and 5,000 every subsequent month. But the new law now from next year is 100,000 for the first month and 50,000 every subsequent month. So it's very grave. It's very serious. So currently, if you don't file your returns in time, it's 25,000. Every month subsequently, you didn't file returns, 5,000 will be added to it. But in the new law now, the first month you fail to file returns is 100,000. And every subsequent month is 50,000. So it's very, very serious. That is why we need to advise ourselves and ensure that we file returns in time. So failure to grant access to deployment of technology, failure to deduct tax, 40% 1 million naira, and you fail to deduct it and remit. The penalty is 40% of that 1 million, which is 400,000. So failure to remit tax deducted as source or self account is 3 years imprisonment or fine not less than the principal amount plus 50% of the sum. Penalty for non-compliance of VSAP, 110 million for the first month and 1 million for the subsequent months. Failure to disclose facts in a dutiable instrument, fine of 50,000 or imprisonment not more than 3 years of both. Fraud in relation to stamp, you can see conviction to imprisonment not less than 3 years or a fine of 2 million. And you can see the use of weapon. The use of weapon is here. Aiding and abetting is here. Unauthorized disclosure, false fictitious claim of VAT, false declaration. False declaration is 1 million or a fine of 1 million. Or 3 years imprisonment or both. You know, so obstruction, FIRS is coming to your office to carry out the job. You refuse them to do that, it's obstruction. So it's 1 million or 3 years imprisonment or both. A first claim of tax refund, 50% of state amount plus interest at CBN rate. Default in payment to mineral royalty, 10% of the amount. Counterfeiting documents, they cut with fake tax clearance certificate or fake documentation. They discover it's fake. It's 1 million and conviction of 3 years imprisonment or a fine of 1 million or both. So when you get this paper, you can go through all these offenses and penalties and see the consequences that are there. Now, I think I've even come to a conclusion so that maybe it can be an opportunity for people to ask questions, because I made this paper to be very short and simple, so that people can also ask questions and we can have time to do other things we're going to do. I concluded by saying that the Tax Reform Act 2025 has come to stay. What matters now is the implementation of the act. The revenue authorities are expected to drive compliance and enforcement based on the provisions of the Tax Act. The taxpayers are also expected to comply in filing tax returns based on the provisions of the Tax Act. Both the taxpayers and the tax authorities must operate and comply within the provisions of the Tax Act. The laws have also been provided for tax dispute resolution mechanisms when tax dispute arises, because tax dispute is inevitable. Everyone should study the tax laws and comply with it. There is a common saying that ignorance of a law is not an excuse. So I'm going to stop so far, and possibly if you have questions on this, we can take it up or you go to the next presentation. Thank you so much for listening.
A round of applause for Dr. Kennedy Wondu for that wonderful presentation. We want to appreciate him, for first and foremost saving us time, and at the same time making a good presentation. So I can see lots and lots of emojis coming from us all. And like he rightly mentioned, since he still has 48 minutes to the end of his session, will grant people opportunity to use that time to ask questions directly relating to his own presentation. So if you have questions, you can indicate by raising your hands. We'll give you the opportunity to respond, to ask your question directly to him within the time that is still available for his session. There will still be a time to, appreciate Doctor. We have that task is assigned to someone from the One Team Social Network. But this is my own personal appreciation, for the good work you are doing, sir.
Thank you very much.
Yes, sir. I have two people who have raised signified interest. Is that all? Because I want to number the people that want to ask questions now, so we can, fast track the session and move on to some other things that we possibly need to do for the day. So I have Miriam Ufodu. I equally have Adetutu Jerome. So I want to believe those are the two questions that are required for Dr. Iwundu. Okay, I have a third one from Aziz, okay?
Yeah, Aziz, okay, yes.
Okay, I have Olabide Balogun as well. Going. So, okay, we have 5 now. Like I said, we still have close to 40 minutes for Doctor. So as many of us that want to ask the questions, let me know. I want to go with Miriam Ufodu. Can you unmute yourself and ask your questions?
Okay, thank you so much. Good afternoon, everyone. My name is Miriam Ofoedu.
Oh, my apologies.
Okay, so thank you, Doctor. The way you call it gives it a different meaning. Okay, so that's why I have to reemphasize on the surname of Edu. So Dr. Kenny Iwundu, thank you so much for taking up this webinar on compliance to competence. And actually, you're making us to be competent in this tax business. So please, my question is that I hear you make reference to Sita and Peter. I thought that these new tax reforms have repealed those acts and replaced it with Nigerian Tax Act only. So I was thinking that the reference should only be to the Nigerian Tax Act, or am I missing anything? That's number one question. Number two is if you could help educate me more on what does failure to fiscalization of accounts means in context of offense. Thank you.
I think, should I take on a question, or we pick the questions?
No, since we don't know